a little bit deeper into all of the different credit scores that are included in business credit. It's a lot different than on the personal side. And we're also going to be talking about how personal credit works in relation to business credit, and the differences between the two of them. I am Alex with Credit Suite, and Ty is hosting right now the bonus day of the $1 Million Business Challenge. So he is out, but you get me for the day. So let's see here. I just want to make sure that everybody can hear me. If you can hear me, or and where you have any other questions, be sure to throw them into the chat wherever you're watching this. And also let us know where you're watching this from. I see Yvonne from Queens is joining us from YouTube. Welcome. If there's any other questions, or you just want to say hello, go ahead and throw that in the chat. So, like I said, today we're going to be going over business credit. Business credit is very similar in a lot of ways to personal credit. In the US, we have a personal credit system. There are three main bureaus to that personal credit system: TransUnion, Equifax, and Experian. And just like on personal credit, you have a personal credit report with each of those three bureaus. You have personal credit scores with each of those three bureaus, and that credit is used to make to help lenders and credit issuers make decisions. Whether to extend that credit card or a line of credit or an auto loan or a mortgage to you. Business credit works in a very similar way. Just like you have a personal credit report, your business has a business credit report. And there are three main business credit bureaus included with that. So there's Equifax and Experian Commercial. Both of those are the same company. You're probably familiar with those on the personal side too. And the third main credit bureau on the business side is called Dun & Bradstreet. Dun & Bradstreet is actually one of the one of the oldest credit bureaus in the world. They've been managing business data and data across people and businesses for over 100 years, well over 100 years. So Dun & Bradstreet is actually very, very important through the business credit building process. And it's important to know what's on that business credit report across all three bureaus when you're going through the financing process. Just like it is important to know what's your credit scores and what's on your business or what's on your personal credit when you go to get a loan or a house or a car or something like that. Let's see. We've got CJ Peterson joining us on Facebook from Texas. Welcome, CJ. Yvonne asked, will you be discussing fixing business credit? That is a great question, and we can go over that. So I'll get to that in a moment, Yvonne. Great question. So with scoring, the main scoring models are a little bit different. Everybody is familiar with the FICO score on the personal side, and the Vantage score is becoming more and more popular on the personal side. On the business side, the scoring is very much left up to the bureaus. So if you're working with Dun & Bradstreet, they have a variety of different scores, but the main score that most people are familiar with is called the PAYDEX score. This is they make it a little bit easier than they do on the personal side to understand. It's from 0 to 100, and it's almost completely based off of how you pay the people that you do work with. So if you're using vendors to help build business credit, your PAYDEX score will go up if you're paying those vendors on time or early. Unlike on the personal side, with business, your payment is considered late if it's 1 day late. So on the personal side, we get a little bit of a grace period when it comes to late payments and things like that. You get 30 days to pay that bill. On the business side, if it's a day late, it's considered late and it's going to affect your scoring. There's also Experian IntelliScore, and Equifax also has their own scoring models. If you want to know more about business credit scores, you can go to creditsuite.com / business-credit/scores. And I'll go ahead and throw that into the comments here. And Alfredo will be able to share that for everybody as well. This is a deep dive article on all of the different scoring methodologies out there around business credit and how your business is scored at each of the main bureaus. So it's really important that you go through and understand how scoring works. Now, business credit plays into your business's ability to get financing. We're talking about loans and credit lines. Not just necessarily vendors and credit cards and things like that, although your business credit profile and what your reports say about your business plays a big role in your ability to get approvals. So if you think about it like this, when you were first starting to build personal credit and you applied for that personal credit card, at college or right before college or right after getting out of college, you didn't have any personal credit history built. And so your approval for that first personal credit card was probably relatively low. And that's normal. It's very similar on the business side. You can't go to your bank and expect a giant line of credit if your business has no ability to prove how you pay your bills. So the fun part about building business credit is that unlike on the personal side, there are no laws that regulate how the reporting happens. So on the business side, about 10% or so, this number changes all the time, but it's pretty safe to say about 10% of business credit accounts, so we're talking credit cards, vendors, loans and credit lines, of business-related accounts report. That means that 90% of the accounts that you can get as a business from credit, loans, credit cards, things like that, do not report to the business credit bureaus. So it's really important if you want to build a healthy business credit profile so that your business can get approved for more money when it needs it, at better terms, at better rates, then you need to really focus on the business credit accounts that are going to report to each of the bureaus. Now, the other thing to consider is what is the distribution of business credit accounts across those bureaus? So if we think about it, I may go to some vendor and that vendor reports to Dun & Bradstreet, but they don't report the payment experiences to Equifax and Experian. And I may have a bunch of vendors or a bunch of business credit accounts and a credit card reporting to Dun & Bradstreet, but then I go to apply for a loan and that the bank or the loan originator or the broker is checking by Experian business credit reports, but I don't have any business credit built with Experian. So it's really important as you're going through the process of applying for business financing, including business credit itself, business credit accounts, as well as loans and credit lines, even if they're from your own bank, you need to have business credit established. So I want to go through some of these questions. And welcome from YouTube. We've got Vivian from Pennsylvania, and she's got a fundability question. So yeah, actually, let's go over that first. And Yvonne, I have not forgotten about your question. I'll come back to it. So Vivian asked, if my business is not structured right, should I start a new business? Vivian, that's a great question. And it depends. If your business is structured as a sole proprietor, it's looked at in the eyes of lenders and credit issuers as not being a real business entity. You can't actually build separate business credit as a sole proprietor. So when you say not structured right, that could mean a variety of different things. If you can add some clarity in the back into the comments, I can give you a more in-depth answer. As far as things like business address and phone number and website and things like that, those are easily changed through Fundability, and we actually have a whole system that walks you through the different steps of, hey, if I use my home address with the Secretary of State and I want to change that address that I registered my business with, it's totally possible to do. You just need to make sure that you're changing those things everywhere they exist on public record, including your bank account and things like that. So hopefully that answers your question, Vivian. If you have additional follow-up questions, feel free to post those as well. shared the wrong one. Yvonne asked, will we be discussing fixing business credit? So before I move on to differences, we talked a little bit about personal versus business credit and some of the differences there. But before I talk about those things more in depth, I wanted to get to this piece a little bit, because this is actually one of the main differences between personal credit and business credit. So on the personal credit side, there are multiple different laws, federal laws, that regulate how things are reported to your personal credit. They regulate how and when things get reported. There are laws that regulate the fixing of personal credit and the companies that exist to fix personal credit. There's lots and lots of regulation around personal credit. So if something, and I don't know what the current statistic is, but a few years ago, the statistic was like 76% of Americans have some kind of incorrect information on their personal credit report. And that has led to credit repair companies or credit repair organizations existing and helping consumers fix or rebuild their personal credit. That same regulation and level of regulation simply does not exist on the business side. So, there are all sorts of laws that if you submit a dispute on the personal side, they have a certain period of time to respond to that dispute and then fix it depending on what the request was that we made to the credit bureau. On the business side, they are actually under no obligation to do what we're asking them to do, unless it's incorrect business data and things like that is typically the easiest way to fix business credit. There are no, each of the bureaus does have disputable or dispute capabilities. But if you were late, for instance, on a payment, it's very, very, very difficult to get those late payments taken off of a business credit report. Because as we talked about, it's up to each individual bureau to kind of maintain their own scoring algorithms, and how they produce business credit scores is through that data. So it's very difficult to, get the actual vendor that you worked with to report data correctly. If it's reporting incorrectly, there's all sorts of reasons why that could be, and it's actually hard to work with the business credit bureaus to dispute inaccurate information. So as far as fixing business credit, the best way that you can fix business credit, unless something is clearly inaccurate, it clearly does not pertain to your business, which does happen the same way it happens on the personal side. It's actually quite difficult to get things that are not clearly inaccurate taken off of a business credit report. So the best way to fix business credit moving forward is to build positive business credit. And there are definitely ways to do that if you have damaged business credit in the first place. We recommend going back and starting with starter vendors and going from there, which our business fundability system and business credit builder can actually help you through. Ashley asks, is it normal to add business trade lines like some do on the personal side when they use authorized users? This is another difference between personal and business credit. Business credit cards, some business credit cards do have authorized users, but they don't work the exact same way that they do on the personal side. So the personal side, the strategy of using authorized users is called credit piggybacking. It used to be way more effective. The FICO scoring model has kind of phased out the effectiveness of credit piggybacking, and it's actually somewhat frowned upon. There's buying trade lines and selling trade lines is a pretty legal gray zone and is not advisable, right? In some cases, it's considered fraud, and there's all sorts of reasons why we would not want to add an authorized user. The CFPB and the FTC have made it pretty clear that if the person does not have the card in hand, they are not a legitimate authorized user. So the same thing cannot be done on the business side, right? We can't just buy any company that's selling business trade lines, or seasoned businesses are operating kind of in this legal gray zone, and the bureaus do not like it, right? So seasoned businesses or shelf corporations may exist, and you may see people selling shelf corporations to build business credit faster, or these shelf corporations have business credit trade lines already established on them, but it's not an effective way to build business credit, and typically it doesn't actually work out the way that you think it does, and so you end up spending lots and lots of money on buying this shelf corporation with seasoned trade lines, is what they'll call them. And it turns out it's unusable. Those trade lines aren't valid. That business corporation may not be set up the right way. And you can't use other businesses' trade lines in your own. So if you were still to go and apply for financing, those trade lines that you purchased won't actually contribute to your ability to get financing or better terms on your financing. Great question. All righty, so let's keep moving. I was just looking to see if we have any more questions. Thank you, everybody, for asking these questions. These are fantastic today. If you have more as we continue going down the line, please feel free to add them in. I also want to highlight, as we're talking about building business credit and what are the differences between personal credit and business credit, if you have a lot more technical questions, you can sign up for a business finance assessment or business credit consultation with our team here at Credit Suite. What will happen on that assessment is we'll go through your business. So, we just answered a question about, if the business is not set up properly, should I just start over? A lot of the things depend on, what's going on in that business. Is it set up as an LLC or a corporation, or is it a sole proprietor? How old is that business? Does it have a business bank account? All of those questions can typically be answered by having an assessment, because what we'll do during that assessment is we'll ask you a lot of questions about your business in particular and build a path forward of how you should be establishing business credit. And depending on what your goals are, if it's to build business credit to run your business, or if it's to get loans and financing, we can hopefully provide a clear path forward for whatever your goals are. So we talked about, a lot of the differences between personal credit and business credit. Some of the things that we did not talk about are things like approval factors, and what plays a role on the personal side is pretty different from the business side. So on the personal side, what makes up your score and all of the different things that play into a lender making a decision is pretty interesting. So on personal, you have payment history, credit utilization, length of credit history, the different types of credit that you have. So like auto loans, mortgages, credit cards. If you only had credit cards, it's a pretty shallow credit depth, or however you want to describe it, on your personal credit report. And so that may look less desirable to a lender or credit issuer on the personal side. On the business side, like I said, the main factor is payment history, and with your own suppliers and creditors. But then you also have things like public records about that business, the business size, the business industry, and length of time that the business has been physically in business. So those are all things that play a role in your business's ability from a business credit report perspective. And we'll actually pull up a credit report here in a second using our tool called Bureau Insights. And we'll go over all of these different factors and the big differences between a personal credit report and a business credit report. As I mentioned before, as we were going through some of this, there are big regulatory differences between personal credit and business credit. The FCRA, or Fair Credit Reporting Act, protects us as consumers from erroneous or negative items being inaccurately reported on our personal credit reports, right? We have the right to dispute either ourselves or through a reputable credit repair company inaccurate items on our credit reports. On the business side, we don't have these legal protections or laws that regulate how things are reported and our ability to dispute them. So it's really totally up to the bureaus for you to work directly with them. So there's a lot of factors that play into business credit scores. We mentioned payment history. It's probably the most impactful one. Credit utilization is taken into account into a couple of the scores. However, it's a much different behavioral behavior between a person who is capping out their utilization and a business who maxes out their utilization. So if we think about it, if you're maxing out credit cards on a somewhat regular basis on the personal side, it's a very risky behavior to lenders and credit issuers. And they can see how much of your utilization you're using month to month. And also that will affect your overall FICO score, which is a good indicator of the overall health of your credit report. On the personal side, while it does play a role in some of the scoring models, it's looked at very differently. It's a somewhat typical behavior to spend lots more money as a business because you have day-to-day expenses that you just don't have on the personal side. And those typical day-to-day expenses on the business side are oftentimes much more expensive than you have personally. And so credit utilization, while you may see one or two scores in the business credit world that take into account credit utilization, on the credit reports, it's actually looked at very differently. And we'll go over that in a moment as well. Public records like legal filings, bankruptcies, and judgments will also play a role in some business credit scores, and will certainly play a role because they're reported on your business credit report in a lender's decision. Remember, lenders on both the personal and business sides don't just look at scores, right? Scores are really a tool for the these credit reporting agencies or credit scoring agencies to sell credit reports. On the business side, the same thing. These scores are really developed to sell credit reports, and lenders and credit issuers look at the report. They don't just look at your FICO score or your PAYDEX score. They're actually looking at the report and what is included on that report. And then, of course, length of credit history and time in business will also play a role. So before we leave for the day, I just want to see if we have a couple more questions here. Yvonne says, fund box that went into collections and paid off. Unfortunately, holding it against me. Yvonne, I cannot answer that question. I don't think I necessarily have the expertise to answer it. But I recommend that if you scan that QR code that's on the screen, or go to creditsuite.com/consult, you can get in a business finance assessment. We can go over, if you have a business credit report handy, they can kind of work through that with you and understand what your goals are, what you're trying to accomplish with building positive business credit history. I think that's where you probably need to go as far as that route. And we can go from there. I just want to pull up. It looks like I accidentally lost access to our Bureau Insights tool. So 1 second. While I am looking this up, if we have any additional questions, feel free to put those into the chat and we'll get them answered. And I'll pull this credit report up really fast. All right. I cannot find this example report. I think I was locked out, unfortunately, from our software. But I do want to share our overall software with you to help build positive credit history on your business. So that's the sort of main way that we look at businesses, right? So if you've ever worked with a company before to build business credit, or have tried to build business credit on your own, there's lots of things that you may run into. Actually, one other difference that we did not go over is the differences between if you are declined on the personal side versus on the business side. On the personal side, if you are declined, you're told why. And then they will give you kind of a bulleted list of things that were on your personal credit report that contributed to that to you being declined. On the business side, they will typically not tell you why, and often they won't tell you why because of fraud concerns. And so we have developed this software that looks at all of the different factors that lenders and credit issuers look at. It's a lot. It's probably more complicated than most, or more comprehensive and complicated than most people are used to, because there are a lot of different factors to look at. And so we first run down what we call Fundability Foundation. This is how your business is established, and we do checks against various different things. So if you're using a PO box, it's not a fundable address, and so we'll check to make sure, is it a PO box or not, and then clarify what needs to be done in your business to make that business address more fundable. Also with business industry, for instance, this goes off your NAICS code. If you were to pick a non-fundable industry, your business industry would have to be updated, and then updated across the board with the IRS, with like any information with the business credit bureaus. Any place that information is listed then needs to be updated. So this system will actually help you pretty quickly go through all of the fundability, main fundability factors, and then you get matched with both trade vendors as well as different types of financing. So actually, I need to update my business phone, I believe. Okay. So now I can go in and see all of the trade vendors, and this is the fastest way to establish positive business credit history, is to use trade vendors to create that report. And I can select easily who they report to. I can say all reporting, and I can also select no personal guarantee, so that it's very easy for me to separate my personal and business credit. And it's also easy for me to apply for the right vendors at the right time based off of the business credit history that I've already established. So if I go to Funding Manager, I can also see all of the different trade lines that my business has established through the Business Credit Builder. And I can also add accounts that are already existing if I'm coming into the system before using the Funding Manager. So this is the fastest way to build business credit, and also to ensure that what you're doing in your business is fundable. So from a foundation standpoint, to a personal credit standpoint, to a business financial standpoint, all of these things play an overall role in your business's ability to get both business credit and money. Kay Stevenson, welcome from YouTube. You asked, what options do you have for real estate LLCs? I hear it's difficult getting business credit for rental properties. This is a great question, and business credit is actually one of the most used tools by real estate companies, real estate investors, realtors, rent. If you're renting, things like that. Where businesses run into problems is they don't establish things properly. So for instance, if you used your home address when you first started your business, but then updated that address to something else later on and did not update that new address with the Secretary of State, with your bank account, with the IRS, with the credit bureaus, if you've already started establishing business credit, your business can go from getting approvals to getting denials simply because of a business address. And so it's not always this industry has more trouble than other industries, although that's certainly the case. And when you put in your business industry here, it will come up with if it's risky or not. It's just typically little tiny things like business address, business phone numbers, your EIN number being accurate in all the right places. Those are the things that matter, that are most overlooked by all companies, not just real estate companies, but all companies, and are some of the most impactful to your business getting approvals. The other thing that a lot of real estate companies overlook is using starter vendors to establish business credit history early on. So, there's a lot of vendors in here that are useful for real estate companies to have, but you need to apply for them in the right order, right? Lowe's is typically more difficult to get than some of these other ones. And so it's important that you don't just go out and start wildly applying for credit or business credit or vendor accounts. You do it in a methodical way based off of what your business credit history looks like. And so that's where across the board, across industries, you're going to have better results if you work at business credit in a methodical way. I recommend using some kind of software like Fundability because it makes that process a whole lot easier to manage. Yeah, this is a great question. And thank you, K. Stevens, for asking these really good questions. So business phone number. There's a lot of different, different types of phone numbers out there. If you're using a personal cell phone number, there are a lot of reasons why that's a negative from a lending perspective. So, for instance, if that number is used across your that same phone number has to be used across your Secretary of State filing with your bank, with the IRS, with the credit bureaus will pull that data in from all of those places. And so your cell phone number is not only going to show up on public record, because remember, anybody, anywhere can pull your business credit. Unlike on personal, where you have to get explicit permission, anyone, anywhere can pull your business credit report without your permission and without your knowledge. And so you wouldn't want to use your personal cell phone from that perspective. But they will also call or can call to verify information on that phone number. And if they get a message that it's your personal cell phone and not a business number, it can cause problems. Cell phone numbers are now okay to use, but the cell phone number should be registered in the business's name. That's where that's where it becomes most effective. When you sign up for a business phone number, a lot of times you'll have to provide the business name and who that phone number is actually registered to. And so this is where Google Voice numbers and things like that are tempting, but some Google Voice numbers, I believe now you can what's called porting away from Google. But Google owns Google Voice numbers. You as the business owner do not. When you use a service like RingCentral or Freedom Voice or some of these other voice over IP services, your phone number is actually registered in your business's name, and you can take that phone number with you if you ever needed to move services. So I owned a consulting company. I had a phone number with a service called Call 8, and I discovered that phone number couldn't be listed in national databases. It was not able to be listed on national 411 database. And this is back when 411 was much more important in the fundability process than it is now. But I was able, even though that Call 8 number couldn't be listed in 411, I could move that phone number to another service that allowed me to do that. And so that's why it's important to use a service that makes sense. So as far as services go, if you come in here and you say, no, I don't have a business phone number, the one that we recommend the most and find to be the most fundable ready, if you will, phone number is RingCentral. Phone.com and Vonage also have good options for any business who are looking for a business phone number. But like we said, you can also use a cell phone, but that cell phone should be registered in the business's name. So hopefully I answered that question, Kay Stevenson. If you need any clarification, feel free to put that in there. Cashstack asked, is there a certain form you use when updating your business address? Great question. So it depends on what state you're in, of how you would update your address. So if you're using any kind of address, you need to make sure that that address is then updated everywhere. So I recommend just keeping a log of where you've entered that address for your business and make sure it gets updated everywhere. So as you know, I don't know, Cashstack, if depending on what state you're in, go to your Secretary of State first and update it with the Secretary of State. And then you can start updating it with each of the main bureaus. And then you can update it at your bank. And then you can update it with your open business credit accounts. And you need to do all of that before you apply for your next round of accounts when you're actively building business credit. Hopefully that answered it. There's not a particular form. Unfortunately, it's a very each individual place has their own way of updating. Some places you need to call, some places will have online forms, some places will have paper forms. All righty. Well, that is pretty much it. As I mentioned, if you are interested in building credit for your business and want to keep your business credit and personal credit separate, I really recommend that you sign up for a business finance assessment. We'll go over and ask you lots of questions about your business, understand your goals, and how business credit and Credit Suite can help you accomplish those goals. Thank you, everybody, for attending today, and have a great rest of your day.
Easily access business credit and funding to grow your business through the unique Fundability system by Credit Suite. Access your Fundability score to see how fundable your business is right now, and in one click, exponentially increase your ability to get approved for credit and loans. Funding Explorer integrates with your business credit data to show you all business credit cards, loans, and credit lines you can qualify for now. And it shows you simple changes you can make to your Fundability to unlock even more funding options. The Fundability system gives you access to the largest supply of high-limit business credit cards, vendor accounts, and auto financing that actually protect your personal credit and finances. And you get access to loans and credit lines through over 1,000 lending sources. Get the most money to grow your business at the best terms, quickly and easily with Fundability.